What up, HyperChange? Welcome to another episode of the podcast. Super special guest today, Zac, who is the co-founder and CEO of BlockFi, which is a blockchain company. So we're going to talk a little bit about what BlockFi is doing in the crypto lending space, and then also we're also going to cover, what your thoughts are on Bitcoin, Ethereum, and just crypto in general.
Awesome.
So maybe to start off, you could give us a little bit of background about where you came from and what led you to starting BlockFi.
Absolutely. So my background is in venture-backed tech companies. I was in the ad tech sector for about 5 years at two different companies, one that was acquired by Google. I spent a little bit of time there. And then more recently and more relevantly for BlockFi, I've been in fintech, specifically the alternative lending side of fintech.
Okay.
At two different companies, one that was in the middle of the online lending revolution. So we had a broker-dealer, a registered investment advisor, a bunch of different products, and we supported the SoFis and lending clubs and on-deck capitals of the world on one side of our market, and then institutional investors on the other side. And then after that, I worked at a consumer lender called Zibby, and then started BlockFi last summer.
And so BlockFi is sort of a lending model as well, very similar to those business models. So maybe on a super high level, explain what BlockFi does.
Sure. So the easiest way to think about it is that it's home equity loans, except instead of home equity, it's crypto equity. So for individuals or companies that own Bitcoin or own Ether, they're bullish on it and they don't want to sell it, but they want some cash to purchase other investments or fund a vacation or do anything that you would if you had a bit of extra cash. They're able to take the value of their cryptocurrency and get a loan against it from BlockFi.
So let's say in theory, I made $100,000 in Bitcoin. I don't want to sell, maybe because I'm worried about a taxable event. I'm assuming that's one of the main reasons people would leverage your product. So how does the process actually work of me saying, okay, I have 100,000 of Bitcoin in my Coinbase account. How do I actually get, turn that into collateral so that I can get a loan from BlockFi?
So you go to our website, you go through an application that takes 1 minute. Our team will respond to you and say, here's your loan offer, here's how things work. And then once you review that, sign it, move your collateral from Coinbase into our secure storage. Then we fund your loan via a wire to your bank account. Right now, if you have $100,000 worth of Bitcoin, we would lend up to 35,000 USD secured by the value of that Bitcoin. And then if Bitcoin goes up and doubles or triples, it's still your Bitcoin. You just have to pay us back the amount that we lent you. And if it goes down to certain levels, we have actions that are taken that are similar to like margin calls in the traditional world of securities lending.
Interesting. And so, Bitcoin, Ethereum, these are super volatile assets. So the way you hedge and sort of protect against that is by way over collateralizing. So you said it was like for every dollar in crypto, you can only take out 35 cents.
That's exactly right. And what's interesting about that is that it's actually not more risky for BlockFi to lend at a higher initial value, but what it does is it increases the probability that our customers will have these margin call events. And we didn't want to have a very high probability of that happening.
Definitely.
So that's why we set the initial loan to value ratio that we're working with at 35%.
And so then how do you get paid? So you have my 100,000 on Bitcoin in some account. I took out have $35,000. How does the interest rate on that work? And then maybe if you could explain like what sort of margins you guys see or how you make money on that.
Sure. So right now we're charging a 12% interest rate annually. It's interest-only payments throughout the duration of the loan. So it's 1% per month on the amount that you borrow.
Okay.
So you borrowed 35,000 USD, your monthly payment would be $350. You can make the payments using a credit card, a debit card, ACH, autopay. We support all the traditional types of USD payment mechanisms. And we make money because we are taking a small spread on that interest rate that we're charging relative to our cost of capital. So we have investors who are giving us money at a certain rate, and then we're re-lending it out at a slightly higher rate.
Yeah, so speaking of your cost of capital, you recently did a really big funding round, who I believe, was it Galaxy Ventures?
Yeah, Galaxy Ventures led around, Mike Novogratz's firm.
Yeah, definitely. So explain what you guys how much did you raise? What are you planning on doing with that capital?
So we raised $52.5 million. $2.5 million of it is equity that we raised, which is going to expanding the team, paying for our general operational expenses running the company, and $50 million of it is going towards making the loans that are available on our platform.
Fascinating. And so I'm trying to play devil's advocate a little. What's to prevent in this space another company from offering crypto loans, but saying instead of $35,000 on your 100,000, we'll give you 40,000. And there's sort of this race to the bottom to have like less wiggle room if something goes wrong. Is that sort of a dynamic? Or maybe you could talk through like what happens in a margin call scenario? Because I'm trying to think like is what would happen if Bitcoin goes down more than like 70% and in a worst case scenario sort of thing?
So on the question of competition, lending is a hyper commoditized product. The most important thing is the rate that you're charged on the loan, and if there's someone that has a way worse customer experience, but they're charging half the rate, you're probably going to take the loan from them because it's just so much cheaper. And it's really simple to determine, how cost effective one loan is going to be versus another. So we're currently the cheapest option for borrowing USD in the crypto ecosystem, and we intend to maintain that position at least so long as banks aren't actively lending against crypto. And I think we have a long ways before that starts to happen. And to answer your second question on the margin calls, so basically if your $100,000 worth of Bitcoin declined 50% to $50,000, we would have a margin call. And the way that works is there's a 72-hour period where our clients can either add more collateral, pay down the principal of the loan in USD, or take no action. And if they take no action, at the end of the 72-hour period, we'll have a partial collateral sale to rebalance the LTV back down to 50%.
Cool. And so sort of on a higher level, I'm thinking, okay, so as people get a lot of wealth in crypto, let's say there's another massive crypto bull run, I'm assuming the demand for your business and your products is going to go through the roof because people are going to want to start, collateralizing that, getting some cash back. And so I'm trying to think, what's beyond this sort of use case of people making a ton of money in crypto and wanting it to get USD from it? Is that the business model long term, or sort of like what's the bigger vision of BlockFi?
Sure. So one of the first pieces of the bigger vision is that we want to make this product available internationally. Today it's only available in the US, but we think that one of the unique things about crypto assets is that they're global and digital by design, and that our products should be too. And what that means in terms of the impact that it could have in the world is that we can offer low-cost credit in places where it hasn't traditionally been available. So if you think of markets, any market that has bad monetary policy, consumers in those markets either don't have access to credit or they have access to credit at really high costs. And so by offering these types of loans backed by Bitcoin or other digital assets, we might be able to change that on a global scale, which is really exciting. The other thing that we want to do is diversify the set of products that we're offering over time. So right now it's just a term loan product, but over time you'll see things from us like credit card products, line of credit products, wealth management products, different types of things that individuals that are in our addressable market, which is basically anyone that owns crypto or any business that owns crypto, would find useful from a financial perspective.
Awesome. And so I understand personally you're also a Bitcoin investor and believer in that asset. So maybe, I'm curious personally, like what's your sort of investment thesis of Bitcoin? I know there's a lot out there, digital gold 2.0, or is it something that we could use to buy coffee one day when the Lightning Network takes off? How do you see the future of Bitcoin? Sure.
So I think the currency use case is a long ways away. And I think we'll go through a couple of other use cases before we get to that currency use case, at least especially in developed markets. I think of it first as being a digital gold. Gold has a $7 trillion market cap, and Bitcoin is 150 billion ballpark market cap today. So it's got a long way to go if all it is a better version of gold. Second, I think the payment rails that were created with the blockchain network, first with Bitcoin and now with others, are really, really valuable. So markets like remittances, cross-border payments, those types of things are really expensive and slow and clunky today. Blockchain networks like Bitcoin will also disrupt those industries. And then further down the road, I think this could be something that, and certainly in emerging markets or undeveloped markets with really bad currencies, it'll happen sooner rather than later. But it could be something that's used as money on a day-to-day basis for small transactions.
And to those people who usually say either Bitcoin is too slow because there's too much going on in the network, and sort of related to that is the amount of pollution that happens from the network, how do you think about, I have this saying that there's the stagnation fallacy, that if you believe everything stays the same, you won't do a good job at sort of predicting the future. So if you believe the current pollution rate per transaction stays the same and the cost stays the same, it won't be useful for a lot of those use cases. So like, what should we be following in the roadmap of Bitcoin to be able to tell if it is scaling the right way?
There's a number of different metrics you can look at. Transaction volume on the blockchain, total value moved across the Bitcoin blockchain. We're following the Lightning Network and developments that are happening on that side of the ecosystem really, really closely.
Go a little deeper there. So the Lightning Network, maybe you can explain it and like a little background on it?
Sure. So the Lightning Network is a second layer solution on the Bitcoin network. So basically it facilitates Bitcoin transactions without having to record them on the primary blockchain, which basically means that you'd be able to do them a lot faster and in a lot smaller denominations at a lower cost than you do on the main Bitcoin blockchain. You're starting to see a ton of activity there, a ton of development there. It hasn't really started scaling yet, but it will in the very near future. And I think that just like any other technological revolutions, you'll see the speed of development and the capabilities of these blockchain networks increase dramatically over time.
Awesome. And moving on to Ethereum, speaking of scaling, one of my personal things, and I mentioned a lot on HyperChange, is sort of disappointment with the overall dApp traction we've seen on the Ethereum network. Not as many transactions are taking place as they were, 6 months or a year ago. It seems like all of the traction on the network was just speculators buying Ethereum. Nothing has really happened as a real use case besides ICOs, I guess. But even those, in theory, you could say are tied back to the speculative nature of things, not a real business. So I'm curious, is the Ethereum network stalling? Is this just part of like a pullback, so to speak, in crypto? Or what do you think about that?
I think that there's more development happening on Ethereum than there ever has been before. I think that you need to try a lot of different things before you're able to find what works. And I think certainly there are some scaling solutions that have already been talked about and planned, but need to be implemented on the Ethereum network. I don't take lightly the fact that ICOs raise more money than venture capital over the last 12 months. And I think that in and of itself is an incredibly powerful achievement that Ethereum has. And the ERC20 and ERC721 standards are the most widely adopted tokenization standards that exist in the market today. And I think you'll probably see that trend continue to grow. But on the dApp side of things, it's still just clunky. And there's a question of what can a dApp do better than a traditional centralized application?
Exactly.
Access and access into venture capital like investments was the first thing that actually worked really well and attracted a lot of capital. And I think they're looking for what are going to be those next use cases that attract a similar level of activity on the network.
And so I'm thinking like, what's like a best case scenario for the crypto market to evolve for BlockFi? Because I feel like a lot of your business model is leveraged to how the crypto ecosystem does. So how do you think about that and incorporate that into your business model?
We're bulls. So we think that the total market cap of crypto assets is going to get larger over time. We think that's going to be driven by the utility that's created from these different networks. And ultimately our addressable market is a derivative of the total market cap of crypto assets, at least in our current incarnation as a company. So we want to do whatever we can to help accelerate that development. And if part of it is just an increased utility being seen in these assets because you're able to borrow against them, that's great. For delivering credit in places that haven't had it before, or at least not at a low cost before, that's really, really powerful. And there's other types of infrastructure type things that we're working on in terms of more institutional type products. So if you think about concepts that exist in the traditional markets with prime brokerage, they really don't exist at all in crypto today. Concepts like depository control accounts, concepts like being able to get cross-portfolio leverage or to go short certain assets and long other assets. Those functionalities are largely missing or at least not efficient in the crypto market yet, and we think will help enable a lot of those to come to fruition.
So I feel like you're hitting around or sort of gone around this topic of you're going to help people with less access to capital sort of get loans or get access to capital, and that's a really big theme of crypto. Is not, in the US we don't really think about this because everyone has a bank account when you have this great monetary system, but if you're in like Venezuela or another country where they don't have such a solid monetary system, maybe how does crypto get you excited about fixing that problem, and specifically what's BlockFi's role?
You don't need a bank account anymore. And BlockFi's role you can think of a little bit as being like what a bank used to be in traditional markets. A bank primarily lends money and helps create increased economic activity as a result of extending credit and debt into an economic system. And that's what the role that we see ourselves playing. I agree with you that the exciting thing about crypto primarily is access, whether it's venture investing into ICOs on the Ethereum side or just being able to hold an asset that isn't tied to the monetary policy of the government or central bank of whatever country that you live in. And we're bringing solutions to the market that help on the debt and credit side of that access consideration.
Awesome. And so maybe to wrap it up, you could tell the HyperChangers how they could find out more about BlockFi, and if you have any like products coming up or anything cool that you want to mention that we didn't get to, you can let the HyperChangers know.
Yeah, sure. So I would just say check out our website. It's blockfi.com. You can follow us on Twitter. My Twitter name is BlockFi Zac. Our corporate Twitter handle is the real BlockFi. So we'll have a lot of exciting announcements coming up soon, and just stay involved. And we're happy to chat with you if you want to reach out to us.
Awesome. Well, thank you so much for coming on the podcast, Zac. Really appreciate it. If you have any questions or comments for Zac or any ideas that came from this, definitely leave it in the comments below. We'll try and answer those. Also, huge shout out to our Patreon supporters. If you want to support the show, definitely check out our Patreon page. Anyway, we'll see you guys next time. Peace.